Hey, we've got a level 8 now for our stock market crash index. That's red. We've been yellow for pretty much most of this year because of the overbought condition of the stock market. I like to buy after corrections, after pullbacks, when stocks fall to cheap levels. When they go up, 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 and up, it becomes more risky to buy. And now we're in a red condition because the stock market is now in a corrective phase. And the main question we've got to ask ourselves is, how long is the correction going to last? And be prepared to take advantage of it once it comes to an end. But the stock market's been in a bull market now, a cyclical bull market, since 2009. And during that time, we've seen two sizable corrections. Remember the flash crash in 2010? And then last year, we saw a big dip in August, and then in October, a double bottom and a takeoff rally. And now we're in a similar corrective phase. Right now, the stock market has support at its 150 and 200-day moving averages, and it's heading right down towards them. It's going to attempt to hold that support level, but if it breaks through it, it's going to make another leg down. And honestly, I think that's probably what's going to happen. Below that, long-term support, major support, is around 1150 for the S&P 500. That represents a one-third retracement of the entire cyclical bull market, bottom and top. And that one-third retracement is exactly what happened during this correction. In this correction, one-third of the gains are retraced. And that also, is the point of the lower 200-day Bollinger Band and the lows of the market last year. So that's a massive, major support level. If the long-term moving averages don't hold, we're going to see the market make a move down towards that. I don't know if it's going to exactly bottom there. Maybe the S&P bottoms at 1200, maybe even a little bit below it at 1100. I don't know. The bottom line is, if support here doesn't hold, that's where it's going towards. And another reason to think that the market can go lower and head towards that level is sentiment indexes aren't showing big fear right now. Just take a look at the VIX, the volatility index, which measures the premium traders pay for puts and calls in the options market. Typically, levels of VIX above 30 signals bottoms for the market. You can see how it got above 30 during the flash crash and also the correction of last year, and chopped around, even went up to 40, 45 to form a bottom. So you go by that, and the market's heading towards a bounce level, probably pull back on the VIX, and then shoot up to 30 as it makes an approach to that lower level. Now, another reason to think that people are going to end up getting scared before this is over with is the fundamental background behind this now correction, and that's Greece. Greece also raised its head during the flash crash of 2010 and the correction of last year. So the European debt crisis now focused on Greece. And during these last corrections, basically what happened is European bankers put a bailout band-aid on Greece, and that band-aid has now been ripped off. And Greece has failed to form a unity government in the last elections. They're going to have new elections to try to form a new parliament. And the issue is, do they want to go through austerity? Do they want to continue to suffer in 25% employment and 30% cuts in pay and pensions and so forth? And the Greeks don't want to do that. So they're going back to the drawing board. Next month, they'll probably have elections again. If they repudiate the euro, they're going to get kicked out. They repudiate austerity, they're going to get kicked out of the euro. And that's going to mean that the Greek currency is going to become their old drachma. And the effect of that, though, is going to be hyperinflation for Greeks. And that means the money they got now, is going to be pretty much worth nothing. And already we're seeing runs on the Greek banking system. Read this. A transcript from the Greek meeting showed deposits leaving the nation's banking system and after the Greek leaders failed to agree on a coalition government. Greek depositors recently withdrew 700 million euros from the nation's local banks. See, if Greece defaults in its withdrawals from the euro, what will happen is their banking system will freeze and people will no longer be allowed to withdraw euros from Greek banks and try to exchange it. The Greeks will be screwed. So they're withdrawing money now before this happens. Could you imagine yourself being in a situation where you're afraid of the money in your bank and you have to run down the road and pull it out? Could you imagine the fear and panic that your neighbors would be having? That you'd be talking with people on the phone about this? That's what's going on in Greece. And the real danger, the real fear, is that those kind of fears spread to other nations in Europe. I don't really think it's going to get that bad, but that's why the stock market is now in a corrective mode. So I'm planning on riding out this correction. I'm in a nice, safe position, and then taking advantage of it and buying and putting out recommendations to buy and enjoying the rally that will eventually come after this dark cloud is lifted. So enter your email address to your right if you're not on my list, and I'll send you future updates, and you'll get future videos and future ideas from me. And we got like over 50,000 people on this free email list. I'm the author of the best-selling book, Strategic Stock Trading. So if you're not already on the list, go ahead and put your name in, and I'll be talking to you later. Either way.